If someone had told you that amid choppy economic data, a decline in oil prices, and tumult in Washington, that stocks would be at or near all-time highs, would you believe them? Well, that's exactly where the markets are today. The S&P 500 and the Nasdaq pushed further into record territory today, and with just 2 trading days remaining in this month, it appears as if investors decided not to sell in May and go away after all. Today, the Dow finished down just 2 points to 21,080. The Nasdaq added 5. That's a record. The S&P was up fractionally. That's a record. And for the week, the major indexes all saw solid gains. Bob Pisani takes a look now at why nothing seems to be rattling this market.
The markets are not people, but they do have moods, and the mood right now is, I don't want to hear it. The Dow dropped 370 points last Wednesday on reports that former FBI Director James Comey had written a memo alleging that President Trump asked him to drop an investigation into Michael Flynn. Concerns about obstruction of justice were raised at that time. But the next day, the markets acted like it was no big deal. A week later, the S&P 500 and the Nasdaq rose to record highs. It wasn't just a few momentum stocks, by the way, like Facebook and Amazon that moved. Yesterday, roughly 220 stocks hit new highs on the New York Stock Exchange. We haven't seen that in a while. But a few risk factors are still very real. The Trump agenda, for example, is limping along because the Comey-Russia issues are not going away. Oil also is not cooperating, another big problem. It's below $50. And finally, we've had very choppy economic data in the second quarter after a rocky first quarter. Now, normally, you would think these would be big problems for the stock market. So why are the markets clearly turning a blind eye, at least for the moment? Dozens of traders are telling me it's just not that bad, Bob. In fact, it's pretty good. Consider the global macro picture is improving, and the dollar has been trending weaker. Earnings are growing, and guidance has been better than expected, especially for technology stocks. And jobs are in great shape. The Fed also is on the slow path to raising rates and to reducing their balance sheet. And oil? Traders are saying oil really is in the same relatively tight trading range that it's been in for the last 6 months or longer. It's like I said, everyone says, I just don't want to hear it. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.